All right, traders, welcome to today's recap. This is Christian Fromhertz, Tribeca Trade Group, and it is Wednesday the 21st, and today was Fed Day. So we had Powell speak at pretty short conference. Today was the meeting as well as the press conference, and it was a pretty short. I think it was. They said it was about 10 or 15 minutes shorter than Janet Yellen, which I like. I like when the conferences are shorter. There's not that much information to really extract from these meetings. There's still going to be there. They have a schedule, and pretty much I think what everybody was expecting. And I always kind of think these things are a little bit of a sell the news type of event. They said that they raised rates 25 basis points, which everybody was expecting, and they're probably going to do two more rate hikes. That's it. Unless something changes, unless something severely changes, maybe rates move, maybe wages really would have to move higher for that to happen. But anyway, that's that, and it's a Fed day, and it's just one of those things, in my opinion, just to kind of get through. A lot of talking heads like to come on and think, oh, they're going to raise rates 4 or 5 times. Come on. So they did say that they are probably going to step on the gas a little bit next year in terms of raising rates, 2019 to 2020. So that remains to be seen. All right. So what do we have for the S&P? So a lot to talk about today. I'm going to talk quickly in this, but so there were some very interesting things in terms of option activity this morning, and some different sectors that got involved. If you read my Twitter during the day, was talking about how basically the only S&P sector, I sent this out at least once today, that the only S&P sector that's been above the 50-day moving average has been technology. That's it. So you really have to have some other things start to pick up, where this market's going to have a really tough time. You can't just have, in my opinion, it's great to go ahead and be in tech and play individual names that are moving, but in terms of overall market breadth, if you have more of a bullish viewpoint, you're going to want to see more than one sector be above the 50-day moving average. So let's talk about just what this S&P looks like. All right, so I talked about this a little bit in the trading room today, but now that we've, and if you watched some of my videos in the beginning of the week when we were up here, I said, all's okay if we can kind of hang in, above the 50-day moving average, above the short-term moving averages, but we don't have that anymore. Monday we fell below. Tuesday we basically had a very small inside day, and same thing today. We tried to, sorry, I know this is tough to see on my screens, but this is the 50-day moving average, this is the 20, and the yellow is the 5. And the price action is now below everything, and we can't hold these bids, these early market bids. So this is where we were earlier. We were making some progress, but until we get over this, I think you just have to, position a little bit lighter. So let's talk about that positioning just for 2 seconds. I manage two different portfolios, right? I manage a cash portfolio where I'm following the trend, and many of the areas of the market that I'm in is I'm following the trend. There's nothing that's broken. I don't really have to over manage that portfolio. In fact, I made no adjustments today. I don't think I made any adjustments yesterday either. So that just stays the course, and that type of portfolio can withstand chop pretty well. However, if you were trading options in this environment, for me, I could tell you, this video, of course, is for information purposes only, but the more chop that you have, if unless you are selling premium, but if you are directionally playing, it's very, very difficult right now to make money other in swing trade positions, right? I mean, you want to be in swing trade positions, or I want to be in swing trade positions when we got this going on, right? A beautiful trend, and I'm taking profits, 20% at a time at a clip, holding the last winner, rolling out and up, and so forth. All with this type of market, we don't have that anymore. And we tried to get out of this a couple times now, and got faked out. So, I think you just have to position lighter. So what did I do today? I took a couple trades, but I got out of them before the Fed meeting, and made some money on it, and just moved on, because it's just not worth it. It's holding that last piece, and I did this yesterday with First Solar, which ended up pretty nice. First, I'll give you a couple examples, but First Solar, I took a day trade and I rolled it into a swing trade, and this is working quite nicely. XLI had some momentum. I got into this XLI trade. I was going to try to hold the last piece of it, but I got in here, literally caught this nicely when we had some momentum, and got out of this today for just a quick day trade. And I said, we'll see what happens after the Fed, because this is another sector that I have my eye on, but it just can't get away from itself. So, and then you go back to the S&P chart, and I know that I'm talking negative here. Mostly negative about this price action. But I mean, do you see a trend in here? I know you can't answer me back on this video, but you got a MACD bearish crossover. This to me does not look good. And I would rather wait for the price to confirm that we're moving back in an uptrend. So until that happens, I think you have to position a little bit lighter here and be careful about the positions that you're carrying in options. Again, those option positions will whip around the amount of P&L. So that's why I said, cash positions stay the course unless you're breaking support, but option positions I think are not really, you don't want to really stack a lot of option positions into this. The trend is not telling us much right now. Now, granted, I'll leave it on a positive note. It'll take one day, one strong day, and we'll be able to get through all this muck. But we don't have that yet. But on the positive side, all it will take is one strong day. So let's talk a little bit about today's price action. It felt like this morning, it was the busiest day in terms of option activity in the morning and in different things. So I did take this IDTI trade. That was the other day trade, and I was in and out of it. I didn't even usually I keep a piece, but I said, with the Fed meeting, I don't really want to hold much risk. And I was able to hit like a single in this. I think I got in, here, it should be in here. And again, no problem showing you the day's trades, but in this for a day trade at 85 cents, I think I took it off at 105, maybe 110 I hit. So a single, right? I bought some more fold today. I'm already long that name. TBT, I got out of this trade. Remember, we saw big TBT calls that went up last week. So I took this trade, this was a nice winner. And I got out of that before the Fed meeting as well. Here's my XLI trade that I mentioned. I got out of the XLI at $1.70, paid 138. So again, right now, singles and doubles in options. Holding for the big winners. I put on Amazon, which I mentioned in yesterday's video. I took a target in Amazon today because I put that on in the beginning of the day. So 970 target one, paid 790. I put a little GDX strangle on. That one's not working yet. I sold JD for a loser today. I don't want to only talk about. Nobody has all winners. This was a loser. I also got out of remaining of DHI today, which this was a trade that I had to manage a little bit. But yeah, this JD just seems to be too difficult of a trade right now, and I'd rather be in easy trades, not difficult trades. Yeah, here's the first solar. This was the roll that I did that I just mentioned. So yeah, this is my whole blotter for the day, so you could see exactly that of what my activity is for the day. All right, so I talked about all this stuff, kind of the negatives. The positives were, you go back to today's option activity, they really went after some energy names today. Let me bring up just an oil chart here for a minute. This has been awesome looking. And we kind of said this a couple times yesterday. Why aren't these energy companies participating with energy moving up? Well, today we got it. Today XOP was up, 4%. Any energy. It's so funny. I see people on Twitter talking about individual names in energy. Guys, they all went up. I mean, you're not a magician by picking in any of the energy names. We saw a lot of call buying in rig. So it's like, I love it when people they give the high fives to each other. Oh, look at this Exxon, or look at this Conoco. The whole damn group went up, guys. So great. I mean, if you're in it, this energy trade has been very difficult. But let's be realistic. You could have been in any energy stock, and they were up. Well over all of them were up over 2%. I was in Schlumberger. I took a target. You could see that in here, but it's like I just don't get people. Can they not look at the whole sector? Can they only look at the individual names? So yeah, so I took a target in June, 75 calls. I really think that there's like people are missing. They're missing something in their mind is not helping them when they look at one energy stock and they think that they called it. But anyway, it is quite funny. Rig saw right out of the gate saw some calls go up in this one. You know, a couple other names in this sector. I think CRC, which is I'm not sure, I forget if that's a steel name. But again, a lot of commodities. It wasn't just the energy names. ETE, ETP. Those MLP names have been seeing call buying ever since that bad reaction happened the other day, and I think it was Friday of last week, where there was like kind of a false reaction to possible taxes and on MLPs, and they all recovered quite nicely. FCX, this was a name that we talked about yesterday. I checked open interest. I think I talked about this in yesterday's video, how there was some nice call buying, a big block of FCX. And you know what's interesting, and I think I talked about this. I know I talked about it in the trading room. I forget if I talked about it in yesterday's video, but they seem to come into FCX calls when copper is at its weakest. The last time that we saw big FCX calls were, of course, if you don't know FCX, it's a copper miner, as well as other miners. But the last time that we saw some big calls into copper was when copper did this. And again, it's right at the 200-day moving average. I saw this pre-market. I was like, huh, copper's breaking down. We saw those FCX calls yesterday, but I don't know. Somehow they know what they're doing in this. And again, this was where that copper. Sorry, let me just put that to the date, just so you know I'm not making this up. But I think it was on 12/6, the beginning of December. So if we go to FCX, and yeah, here was 12/6. Here's where copper made that bottom, and that's where we saw all those calls, and then this thing just took off. So it kind of looks like this is getting ready to go again. It's got to get through this top of value. Notice the MACD crossover, but not only did they buy that yesterday, this is the activity in FCX today. And again, just in case you didn't see yesterday's video, this was the calls yesterday that caught my eye. It was the May 20 calls, and sure enough, that increased open interest on the call side yesterday. Forget about the weekly stuff. All right, so that's interesting. And then just a couple other plays in the material space. Deere saw a little bit of calls, very small. That one didn't really interest me too much. This one at the end of the day, CNX was, I think there was actually 4,000 of these that hit at the end of the day. Yeah, there's 4,400 of these. Again, a speculative energy name, another oil producer. This name actually underperformed a little bit. CNX. So I said every energy name. I guess every energy name didn't outperform, but. Yeah, a couple other names. Again, you could see the option activity was very good. GM. Again, I could probably spend about another 10 minutes going over this, but I'm not going to. GM has kind of been a nasty, it still is a nasty looking chart. It's underneath the 200-day moving average, which I'm not in love with. If you want to play along with this one, I did put on a small trade. I took a quick target once it was mentioned on CNBC on the halftime show. But I would say your support is 36.72, but kind of a dangerous name underneath the 200-day moving average. Clearly a big move down. And then one other name, like I said, I could spend some more time, but going over this Win, even though Win in Las Vegas Sands was down a lot today too. And I liked this group too, the casinos, but they really got smoked today. Las Vegas Sands was down 1.4% and was kind of hanging out at the top of value for a couple days, and just got squashed today. So no buy signal until that happens. Win, yeah, I mean they went in and bought Win calls a couple times today, and it closed on the lows. So, maybe a name to keep on your radar. Half of what this is, by the way, watching the tape and call activity, clearly you can't take every trade. So half of it is just kind of having a game plan coming into the day on what you're going to do and what you're not going to do, and then just kind of take notes on some names. That helps me a lot in terms of, watching the tape all day long can be distracting, and sometimes you can get away from your game plan of what you want to do for the day. What I do is, what I've learned to do, rather than like take 3 new trades a day, which you can't do that in this market. You just end up writing down trades and setting alerts where you think things are interesting, and being patient. The other thing that I think, which I forgot to mention earlier, it kind of also felt like today in the morning, a short covering rally. I said this in the room. I said, you know what? The one thing that disturbs me a little bit between, if you look at the VIX, right? This is not supposed to happen generally. What normally happens with the VIX is, you usually see a rise in volatility into an event, and then once the event happens, then the VIX sells off. Once the event becomes known, remember the VIX is kind of like uncertainty, and so once an event becomes known, then the VIX usually sells off. It gets crushed after an event. And the last time Powell has spoken, the VIX sold off into his speech, or in this case FOMC meeting, and then rose afterwards. So what this kind of feels like to me when the VIX does this is short covering, not so much going long. Because then again, you could see after 2 o'clock today, the sellers were in control again. And I don't think there was that much news that came out of this Fed meeting. I just think the sellers are in control of this market. So again, I'll leave it here for the day, but I think just you have to be a little bit patient and let this work its way through, and wait for some more clear buy signals. Again, on the positive side, great to see some other areas catch some call buying other than technology. Because again, other groups are going to have to pick up the pace a little bit. You can't just have technology go up and everything else go down, in my opinion. Have a great night. See you tomorrow.